Good morning, everybody, and this good morning to this fresh session of commodity trading focus on aluminum. Before we start the session, I would like to give a small introduction about Asian Metallurgy Show. As many of you know, Asian Metallurgy Show started in 1997, and it started first as a ground show, and we used to do the exhibition part and the conference part in Bombay Exhibition Center, Goregaon. After COVID, we transformed it to a digital platform along with all our other conferences and exhibitions. And last 2 years, we have been doing this show on digital platform. In 2021 December, it was first done, and then we could reach to around 5.5 viewers all across the globe. In 2022, we could reach to around 7.4 or something across the globe, viewers across the globe. And this year, we are expected to reach around 1 million viewers across the globe. So this show is growing. That shows the power of digitalization. That shows the power of technology, and how with the help of technology, with the help of digitalization, and these virtual shows can penetrate throughout the global markets. That is one positive point about the what we have learned out of COVID is one of these good things that we, with the help of digitalization and technology, we could reach to every corner of the globe. That is one thing. So now coming to this session, commodity trading, focus on aluminum. You see, last few years there have been a lot of emphasis on infrastructure development in India, and you know it very well that infrastructure development needs metals. So when you conceive a project, when you conceive the design of the say bridge or roads or whatever dams, then you use a lot of metals, lot of steel, lot of other metals in the design, but you don't purchase them at that point of time. You need to purchase them at a later date. So that is where the commodity exchanges, commodity trading comes into play. And to explain this commodity trade process, the technology, and the usage applications, we have experts with us who will explain us and who will discuss the future of commodity trading actually, and how it started, why it started, what is the use of commodity trading, and who can use it and how we can use it. So all these questions we have, and we will seek the answers of our questions from the experts. We have two experts right now, and the third is about to join. We have Mr. Chittaranjan Rege, who is head of base metals at Multi Commodity Exchange India. Mr. Rege is head of product management team, PMT, with MCX. He is responsible for identifying and listing new product, increasing participation in the metal complex, imparting knowledge to investors on the commodity futures, and making MCX a preferred hedging destination. Mr. Rege has over 27 years experience in the financial and commodity risk management, both as a part of corporate treasury team and leading financial consultancies. Prior to joining MCX, he worked with leading organizations HINDALCO Industries, Ernst & Young, McLeod Financial Services, and Medco Marketing Mumbai. So welcome, Mr. Rege, and thanks for sparing your time with us. And we will seek a lot of answers for our questions from your side. We also have Mr. Shashank Singh Jadaun. Mr. Shashank Singh has been in metals industry for the last 7 years now, and is attributed to starting non-ferrous business trade OFB Tech Pvt Ltd in 2019. Non-ferrous business contributes to 5,000 crores annual turnover in OFB across aluminum, copper, and zinc metals, and is among the largest businesses for the company. Prior to joining OFB, he has worked for 2 years in Vedanta in aluminum sector. Mr. Shashank has completed his MBA from IIM Udaipur in 2017 and BTech in the Computer Science from NIT Allahabad 2013. Post BTech, he has also worked as a software developer in Oracle during the period 2013 to 2015. The transition journey from being a software developer to commodities trader has been a wonderful one. Yeah, thank you, Mr. Shashank Singh, for joining us and sparing your time, and welcome. and thanks for joining the metals industry from a software engineer software engineering industry. This is something like a reverse brain drain, because we see all these years our engineers, our metallurgists, and other mechanical engineers are being snatched away by IT industry. So this is first case I am seeing somebody from IT industry is coming to metals industry to welcome to metals industry. I think we have lost his video. Mr. Shashank Singh, are you there?
Yes, yes.
We cannot see you, sir. Our third expert is Mr. Bibhu Mishra, who is advisor for Hindalco, and I will introduce him when he joins. He is expected to join in few minutes, but till then we will start our session. And first, I would have questions. I would rather like Mr. Rege to speak the opening, opening few lines about the commodity trading, why commodity trading should be done, who can benefit, how it is done. Mr. Rege, please.
Thank you. Chandekar Saab. Really happy to be part of this session. As you rightly mentioned, I think it's a very opportune time that I first explain as to what this marketplace called MCX is all about.
Yeah.
I mean that will bring the entire thing into perspective. I mean, in the market wherever we meet, I mean whether it is aluminium industry, copper industry, nickel industry, or anything related. People have this notion called LME. So I mean, it's easy to give analogy and from there, bring the people to the Indian context. So what London Metal Exchange does globally is a price discovery mechanism, price benchmarking and delivery and all that. Very identical to LME. There is another exchange called SHFE, which more and more people are getting aware of, which is catering to the Chinese audience. Same way, multi-commodity exchange is a marketplace for the domestic, for the domestic players. It's not meant for domestic players. It is a domestic commodity price discovery mechanism. So it's an online platform, very identical to what NSE and BSC do. Very similarly, we have also listed contracts from the metal segment. We are regulated by the Securities Exchange Board of India, which is SEBI. I mean, in their nomenclature, the exchanges they regulate are all stock exchange. So we are practically a stock exchange. But because we have chosen to be only in the segment of commodities, we choose to call ourselves as commodities exchange. That's number one. In the the way it works for us is that there are 91 commodities which are approved by the central government via a parliamentary regulation that those can be listed in the futures exchange, and the futures exchange are regulated by SEBI. So these 91 commodity includes about 11 of them are from the metal segment, several of them are from the energy segment, few from the bullion, and a mass is there in the agri segment as well. So we also have contracts under MCX in the metal segment, energy segment, bullion segment, and agri segment. The way we operate is when we list a contract, what goes behind it is that we have to first study the contract, first study the market, first study the trade. Based on that, we create a workable transaction mechanism, which is called contract. We take it to, via the product advisory committees. Then it goes to the exchange regulatory oversight committee. From there, once it is approved, it goes to SEBI. SEBI, after doing a lot of deliberations, then finally allows us to list that contract, on MCX. Now, when we list, anyone who has got, we all know brokers. I mean, for us, we call them members. So all these members and brokers, they facilitate access to MCX to all their clients, and people who are, whether it is retail, whether it is HNI, whether it is corporate, whether it is private limited company, whether it is HUF, everybody who is a domestic entity and has got PAN can do a simple KYC process and get attached to the broker, and via them they can online transact on MCX. Now I would somehow try to stick to the entire example and everything about aluminum. I mean, while same is replicated on copper, zinc, lead, and nickel as well. So, for example, on aluminum, we started the contracts to be linked to LME originally, or fairly long. But in 2019, in March 2019, we converted the contracts to be delivery settled. When we say delivery settled, which means is if we have a monthly contract ending on the last working day of the month. So, like December end on 29 December, the last working day, the contract will expire. Then there is Jan end, Feb end, March end, and so on and so forth. So last working day of the month becomes the expiry period. Uh, Last and the entire month, we transact. We allow the facilitate the transaction. People to participate and do a price discovery, and that's how it is. So people who have metal, they will come and sell here. People who want metal, they will come and buy metal from here, and that's how the price discovery works. Now, one of the most critical thing when we say we have, the price discovery happens, most important thing is the price what we have listed is all inclusive without GST price, which means the physical market will say, aluminum LME is X. I will add a premium to it. That becomes landed price. From there, rupee dollar multiplication. From then they will add the customs duty of 7.5% plus the cess. So it becomes effectively 8.25%. And once that Excel sheet will show you XYZ number, you will then add, the transport cost and your margins. And that's how you will say that my selling price for today is this much. What's happening on MCX is it's a composite price. So we have a primary delivery center for aluminum at Raipur. So which means the any buyer or seller wanting to give delivery or take delivery will have to bring to nearest proximity. So Raipur is a primary delivery center. Up north, we have Palwal at NCR, which is part of Haryana, as the additional delivery center. Calcutta is additional delivery center. Chennai is additional delivery center, and Thane. So east, west, north, south, we have additional delivery centers, and the base center is Raipur for the metal to be delivered. And same way, buyers also know that if they get delivery, they are going to take delivery at these locations only, because the locations are pre-decided. The warehouses at these locations where seller can deliver are pre-decided, and where how much metal is lying is declared or displayed on the MCX or declared on the MCX website every day. So there are never a surprise. Every 24 hours, we keep refreshing as to how much metal, in which form, how much quantity is lying in which warehouse, which location, and accordingly the price discovery happens. So effectively, what our aim is threefold. One is we want to be the price discovery platform for aluminum, which means anyone located anywhere in India can actually look at the MCX prices and do their calculation and estimates based on that, budgeting based on that. That's one. And number two is, we want to be the benchmark for the industry. Benchmark in a sense that for us, it is the primary aluminum with 99.7% purity is delivered. So LME registered brands are delivered, ingots are delivered, sows are delivered, and T-bars are delivered. Now, when we say industry is not only these three forms. So there will be scrap people consuming and trading scrap. There are people who will be, trading and consuming, source T-bars at other locations also from other, destinations also. Then there will be a value addition. People will create billets, people will create sheets, people will create, the foils and extrusions and whatnot. Our point is that whatever value add people are doing over and above ingots or sows, they can do a plus calculation rather than making a guesswork from what happening beyond LME. So our point is it's a India-centric price discovery which is happening. It is India-centric price discovery which includes every component possible. So the only component which is outside the purview of screen price is the GST, which is bilateral. So I mean, anybody buying and selling in whichever state to whichever state is bilaterally 18% is given and taken. But the price discovery of what is the right price of aluminum at this point in time is all available on MCX. That's the utility of being the price discovery platform and benchmarking. Same way, people who are dealing in scrap can say that if the MCX price is X and your metal is carrying percentage of X, then what should be your price? That's another way to look at it. And we believe that this is slowly becoming popular as more and more people understand and transact accordingly. And the final thing is that we are a delivery destination of a last resort, which means when the seller or a producer has got metal with them, if they will primarily try to sell this thing directly to their consumers. In case if it is not getting disposed there, then they can deliver on MCX and get remunerated for that. And same way, I mean, a simple example for this is that in 2020, when the pandemic hit and everything was locked down, people who had inventory, people who had metal coming from overseas and was on high season when it got delivered here, all of this metal actually got delivered on MCX because there were no buyers for the metal at that point in time. So sellers were able to dispose their goods on MCX and get remunerated rather than being high and dry on the working capital. Same way, buyers can actually buy from MCX in case if the physical market is offering a very different price. And another example is when the unlocking started happening. So all this metal which got delivered on MCX, and I would tell you that in those days we had inventories in excess of 28,000 tons, and so unlocking happened. Then people were constrained of the ready availability of metal because the imports were not there. The shipping lines had a problem. All this metal what we had in our warehouses actually seamlessly went out and supplied to the physical market. So my point is, when we say delivery destination of last resort, we are not an alternate source of goods. We don't create. I mean, we do not produce a LME brand of ingot. We do not produce LME brand of teas or sows. Whatever the material comes in will be redistributed, realigned to the buyers on the exchange. So we are a price discovery. We are a equalizer of the sentiment. We allow trading from morning 9 a.m. till evening 11:30 a.m. So my point is, whether any action happening in Far East, any action happening in Indian time, any action happening in the European time, including the times, the American, opening times, all of that get captured, not only in terms of metal price, also in terms of currency fluctuations and any additional demand supply news what you will get reflected in the MCX price, because we transact from morning 9 a.m. to 11:30 a.m. So, Chandekar sir, probably I took a bit of a time to explain as to what MCX does. But the idea is to give you a perspective that
Absolutely, it is okay. It is okay, sir. Please
so what's important is that people should get an idea of the MCX and the utility it brings to the table, and use it for their own purpose, because not everything in the physical market can actually have a listing or a transparent pricing, but you use the existing transparent mechanism to your benefit, and so that not only you can hedge yourself, you can also benchmark it, and accordingly the price fluctuations will never impact your bottom line, and you can be profitable always.
Yeah, thank you, Mr. Rege, for your opening remarks. And we have Mr. Bibhu Mishra with us now. Welcome, Mr. Mishra. Hello, can you hear us, Mr. Mishra? Okay, let him settle and do his audio and connect his audio and all. So meanwhile, I will again go to Mr. Rege. Mr. Rege, you have explained in very detail the concept rather than the procedure and how the whole thing happens. I want to ask you in simple terms, who all are going to benefit? Who all are benefiting? Suppose we are focusing on aluminum. Suppose let us take example of aluminum producer, say Hindalco, Nalco, Vedanta, whatever. Let us take example of a aluminum processor like somebody a re-roller aluminum, and let us take example of aluminum user, say extrusion plant who buys aluminum billets. So you tell me how these three entities will benefit from commodity exchange or commodity trading.
Okay. So let's take an example of
First, let us
producer. A producer.
plant.
Okay. So Nalco,
Yeah.
Hindalco, Vedanta, and the likes
Yeah.
of them.
Yeah.
You know, let's imagine their facts of life. as simple as this, that suppose capacity is X, and assuming that they are running at full capacity, so annually they are going to produce X metric tons,
Yes.
and X divided by 12 is every month production, and that has to be sold. Now, their objective is they want to sell at an optimal price. They want a better realizations, and the cost of production, say, the whatever the best realizations are, they would like to have. Now, their style of functioning is that they would have an MOU or existing arrangement with the people who the consumers, so that they are able to sell those goods to these consumers for their value addition and thereafter. So there is a set methodology in which they will work. But most important thing is selling is one and having an agreement is one, but at what price? What price are they going to sell this metal to them? That price is discovered on MCX. So our point is, when you are selling goods to your consumers, the producers will get the best visibility of the prevailing price when they are referring to MCX. So at that point in time, it's a most impartial way to assess where the current market price is prevailing when they look at MCX, because metal price, premiums, rupee dollar, customs duty, and host of everything is factored into that price, and they can manage things accordingly. There are few commodities I don't see impact of the FTA agreements in aluminum as much, but I mean the free trade agreements wherever India has, and supposing those countries are having surplus or excess capacities to deliver goods here, they can bring in good and deliver it here. So I mean there could be influx of aluminum coming from other countries also and getting delivered into the domestic markets or on exchange. That also impacts the price. So the best visibility to the producers as to what is the realization they
So
will have.
Rege, just a minute, just a minute. We'll just see whether Mr. Mishra is comfortable now. Mr.
Yeah,
Mishra,
yeah.
can you hear us?
Yes. I'm with you and I'm comfortable. Everything
Yes.
is fine.
Yeah, everything is fine. Thank you very much for joining. And Mr. Rege, just a minute. We'll introduce Mr. Mishra and then you can continue. Okay. Yes, welcome, Mr. Mishra. Mr. Bibhu Mishra, having a metallurgical engineering degree from National Institute of Technology, Rourkela, Industrial Engineering, graduateship from Indian Institute of Industrial Engineering, NITI, Bombay, with the MBA degree from HW Edinburgh Business School, is currently heading Manufacturing Center of Excellence Department of Hindalco Industries Limited as President and Head of Manufacturing Center of Excellence. He led the Hindalco Aditya Aluminium Smelting Greenfield project worth 17,500 crores, which is now one of the most economical and purest metal producers in the world. Mr. Mishra institutionalized the Manufacturing Center of Excellence at Hindalco, the head of MSCB Hindalco. He has demonstrated exceptional organization leadership in several areas such as reduction in caustic soda consumption in aluminum refineries, installing 100 megawatt power solar plants for renewable energy, deployment of patent systems, development of maintenance strategy and execution framework. Mr. Mishra has served as President, CEO, Aditya Aluminium, Hindalco, Aditya Birla Group, Chief Operating Officer and Senior Vice President, Bharat Aluminium Company Limited, Vedanta Resources PLC Group Company, Reduction Superintendent MOZAL, Mozal, BHP Billiton Group Company, Smelter Operation Expert and Aluminum. Currently, he is advisor to Hindalco. Am I right, Mr. Mishra?
Yes. Thank
And,
you.
and thank you very much for joining us. Though slightly late, but you are not late because we are having the first initial comments from Mr. Chittaranjan Rege, who is from MCX, and Mr. Shashank Singh, who has also joined us from OHB Tech Pvt Ltd. So
Okay.
we are talking. I am asking Mr. Rege the first question as who all are going to benefit from this. So he is explaining us one by one the main producers, then maybe a processor and the user. Please continue, Mr. Rege. And after that, we will go to Mr. Mishra.
Yeah.
Sure. So the point is the uncertainty of the price at which the realizations will happen. That gets addressed, and that is where our positioning is. we offer the real-time price discovery, and then based on that they can estimate. Now, that's number one. Number two is the example of X metric tons to be produced annually divided by 12, that becomes monthly production and the realization of that. But even more critical is that if they are going to produce this much quantity every month, they would want to secure the price of everything they produce down the line. So there are plenty of times when producers will actually take hedging positions on the exchanges, so that the realization of a future production can be secured, so that whatever the cost of production is, and if the realization is better than that, those can be locked in and accordingly. Exactly similar to how the impact or the the value proposition we bring to the table for producers is the opposite for the consumers. Because let's take an example of extrusion producer. Now in his business is going to perpetually keep buying the primary produce. From there he is going to extrude the extrusions in variety of forms and sell it in the domestic market to the builders or in whoever. So the point is, if the capacity, for them, they want constant, and extrusions for that matter is not so much of a tender-driven business. It's I would say it's a very very consumer oriented business. So they need to have distributors. They need to have the retail outlets from where people can actually buy extrusions for their the domestic application. So which means he's going to buy today for whatever his production is. He's going to buy today, convert the extrusions, transport it to the market of the choice, wait for the disposal to happen or the final sale to happen, and only then the realization happens. So which means having bought on day Y or any of the dates in December, the realization may probably happen in the Feb or March, or let's take a thumb rule of about 1.5 to 2 months. The point is, having bought today, making a guess whether the realizations are going to be better than today's price is a gamble, and I think it is far better not to take that gamble and take the hedging route, which means the consumer industry, who is the routine buyer of the raw material, who does value addition and then sell in the market, should always subscribe to hedging, wherein for the portion they have bought today, they should go and sell their produce for the future date. And whenever the actual sell happens in the future date, reverse the mechanism so that the futures market will give an offsetting impact, not leaving anything to the vagaries of the market. So these are the two opposite poles.
Yeah.
Another interesting portion which comes in between is people who are into simple trading. Trading in a sense, I am a distributor of the say suppose I am distributor of the one of the producers. I would buy. I'm not going to do a value add. My business is I'm going to distribute this thing on a retail basis, smaller quantity to the smaller consumers, and I have an uncertainty of when the price will change. So my trouble is, my value addition is that I was given, I was sold the metal at a bulk discount, and when I sell it in the market, my discounts are a little lesser, but then uncertainty of the absolute price can be of impact. That those guys also can hedge. Third thing is, and most critical, I think the infrastructure, what you mentioned about the aluminum application happening in the infrastructure thing. Infrastructure business, it's all tender-based business. Okay, so once you have, if the power grid has given orders to lay, the 600 kilometers of cabling from one city to another city, one town to another town. Now the the project manager, the KECs and the Kalparutarus of the world, once they have the tender with them, for till the execution life of the tender, they cannot change the price, which means so 600 kilometers of this thing, translate that, and suppose they require, I don't know, but I'm saying that 1,000 tons of metal for the life of the project execution. Suppose that takes 3 months, they have to keep praying that the price of aluminum should not change, because having sold the metal, getting the tender is like selling the metal. So you have already sold the metal to power grid, and to produce that cable, when you are going to go out in the market and buy from the producers or traders, the price can change.
Yes.
At that point in time, there will be problems. So If you are a tender-based business, you need to go and hedge on MCX by taking a buy position and progressively reduce that position whenever you procure physically and ensure that the margins will remain intact. So, frankly, Chandekar Saab, if you ask me, on MCX, you can either go and buy or you can go and sell. The reason for which you do is coming from the genesis of your business book,
Yeah.
your business,
I understand.
and accordingly it gets decided. But what I am repeating myself is that the price discovery, price benchmarking is the real value proposition we bring to the table, because it's very impartial. It includes every possible component which is variable, you cannot manage. Single point management, price discovery and hedging can happen on MCX, and that is our value proposition to the industry, whichever business you are in.
Thank you. Thank you for the detailed explanation. Now I think most of our viewers are also clear about who can benefit and how they can benefit. Thank you very much, Mr. Rege. Now I would straight away go to Mr. Mishra. Mr. Mishra, yesterday when we discussed the subject, you were talking about how technology can help the business and help the transaction. So please explain us, sir.
Yeah. Uh, okay. So just let me start that, I will be giving a little bit perspective on how aluminum prices changed over a long time.
Please.
I'm in this business from 1984 till now, almost 40 years. Okay. And I have seen some 3-4 major changes. And with major changes, maybe, we talked a lot about the trading, but also the people who are investing, who are building plants, for them, this can be it's very serious decisions which they need to take. So past around 1980, so if you think about aluminum, it was at one time it was more expensive than gold, and that is when the Prince King Louis used to give his special guests food in aluminum plates. Now it may look a bit ridiculous, but that is from where we started. But with the technology, the things started becoming better, and the price started coming down. Somewhere around 1980, there were 4-5 Western competitors. They were all competing for the same improvement in the technology, and that is when there was a huge change in the market. All the modern technology and all the modern high kiloampere pots, they started appearing after 1980s, and at that time suddenly the lower technology plants, the plants which were producing at very low current, low kiloampere and all, they found themselves at a very high end of the cost curve, and slowly, and that used to be around 40% more, like compared to the modern plant. A old plant used to produce aluminum at a cost which was almost 40% more, and that is when many of those high cost plants, they started going shutting down the shutter, and that was somewhere around 1980 to 1990. After that you will find that, so that was a big change in the market. Then a major change came, that the cost of power globally, it started increasing in all the countries. So the plants which were based on very long term investment in power plants, they started doing very well. Like the plants you see in Canada, they've invested in the hydroelectricity, so that is helping them. The plants which are based on the coal, okay, many of them, they had to stop. Many of the European plants, American plants, because of the high cost, they stopped. So that is one. Power cost is a major mega trend, and that affects the market. Now on that, if we go to the very recent thing, okay, it is how green is your power is something which we are talking about. Then it came, all these large plants. China started taking a lead when they started building large plants with very efficient logistics. So global sourcing of all the raw material, including the raw material for generating power, they started coming very efficiently, and they started with big plants. they started dominating the market. Now, with this sort of things, now let us say what are the other mega trends which are going to affect this. One is it is quite a lot of discussion is happening, carbon border tax mechanism, and basically all the governments are going to tax, and how the governments are going to tax, to what extent, that is going to determine the aluminium market. So one of the common thing is that if it is green, okay, let us for the green there is a premium. Right now it is almost nothing, but with the carbon border tax mechanism, I think it will become more and more important. So there, countries like now China is the #1 and India is the #2 producer of aluminium, though we produce significantly low amount. But China, mostly they are producing with coal power, which is not green. They are trying with a lot of difficulty, they are trying to move towards green, but that change will not happen very quickly because Chinese aluminum plants, they depend on the grid power. So, if the Chinese grid becomes 100% green, then only they can have a green aluminium. In India, it is an interesting story because in India, we had terrible infrastructure. So all the aluminium plants decided to have their own power plant so that they can have uninterrupted power. So here we have got an advantage that the aluminium producer, basically the top ones, it is Nalco, Vedant, and Hindalco. They control the power generation, and they have got an opportunity to become more and more green. And I think all of them, they are working on that. So that is one trend which are going to do. In terms of technology, there are two important things which may affect. One is that because aluminium needs almost 50% of the aluminium cost comes from power cost. Now nuclear power is being considered, and there is an emerging technology side there where small nuclear plants, something from 30 to 200 megawatt, but with a new generation of technology where there is no heavy water, and because there is no heavy water, in case something goes wrong, the radiation will not spread outwards and will not affect. So it is a far superior technology. So that is where the technology is heading. Some of the technology mega trends it may affect. And the other one which is coming is an inert anode. The research is going on for last 30 to 40 years. So while making aluminium, we use anode, which is made from carbon. So that is to be reduced. That is to be replaced with an inert anode. So these are some of the areas where technologies are going to play an important role.
Yeah, thank you, Mr. Mishra, for your initial comments. And really, the aluminum industry too has moved a lot from in all these 40 years which you were there as associated with the industry. So thanks for sharing your experience, sir. Now I'll go to Mr. Shashank Singh. Mr. Shashank Singh, I know you have waited for long and you have heard both these panelists. Now it is your turn. Please share with us what is your role in the whole system and what do you do, and what has been your experience? You are here for 7 years or so now, and I again welcome you from IT industry to metal industry. Sir, he has come from IT industry to metal industry.
Okay.
So this is reverse brain drain.
Yes.
IT industry has been snatching our engineers for a long time. Now this person has come a reverse way. So welcome to metal industry, and please share your experience in last 7 years. What do you do? What is your role in the whole system?
Sure. Thank you, Mr. Chandekar. And it has been a pleasure listening to Mr. Rege and Mr. Mishra. So their combined experience is almost double my age. So it is always an honor and always a pleasure. So welcome, Mr. Rege, welcome, Mr. Mishra, and also welcome to all the viewers. So OFB Tech, so we started non-ferrous business in 2019 when I joined here from Vedanta. So From 19, we started into non-ferrous. What do we do? How do we do? We started with some alloys, ADC12, LM4, LM6, the ones which are used into, what do you say, into these auto component industries. We also ventured a bit into rolling. We went a bit downside. So we went into rolling products, rolled products. We went there. We went into extrusions. But again, there was a hiccup which we were getting. We were not getting the required scale or the required volumes. So that is where we hinged in mid of 2019 and we moved over to primary products. So when I say primary products, so those are ingots, billets, rods.
Yeah.
So ingots, they would be melted away, as Mr. Rege was telling, they would be melted away, they would be used into some other value-added products, maybe extrusions, maybe rolling products. Wire rods would be definitely be drawn and made into cables and wires and used for infrastructure industry, into conductors, cables, wires. And billets would be definitely be used into extrusions.
Yeah.
So here we identified a gap, a value gap. That is where we pitched in that buyers don't need. If we talk before I delve into this, I'll just give a macroeconomic situation of aluminium in India and the world. So
Yeah.
India is a net exporter of aluminium, as well as India is almost 8 to 9%. 8 to 9% of the world production of aluminium goes from India. India is almost 4 million a year, and world production is close to 44 million tons per year. So as consumers, so now getting back to the original point, so consumers, they don't need huge quantities at one go, because these are, if you are talking about aluminium in the last 3 or 4 years, if we see the average rate has been with GST, it has been close to, the lowest has been to 210, the highest has been up to 350 rupees per kg. So even if we take a median of this, let's say 250 rupees per kg, so 100 tons of aluminium costs close to 2.5 crores. So this is not a wise choice for any industry to be putting up a lot of working capital into their inventories, because this being so costly as a raw material, this would eat up all their margins. So what did we identify? We identified, boss, the customers, the consumers, we are a B2B player. So our customers, the OEMs, the ones who are making extrusion products, the ones who are making rolling products, the ones who are making cables, wires, conductors, anyone who is consuming aluminium is my customer. So they don't need, or they cannot go for a higher volume, purchase. Despite they can be any big, or how much so big they can be, they cannot be going. They would always optimize their inventories in a way that their working capital is not impacted much. So, but like I said, that manufacturers are producing it in bulk. Manufacturers cannot be fulfilling those 550 tons order, 100 tons order, 500 tons order. They want some customers who can procure from them in bulk. So there is where we pitched in. We associated with Nalco and a couple of other players, and big players in the market, and maybe some outside India players we imported as well, wherein we buy it from them in bulk. They have their own MOU schemes. They have their own discount structures for volumetric lifting, which Mr. Rege was also telling, that we get those volumetric discounts in the market. Now, what is the value that we can give to them into their required quantities, their scheduled BOQs, month on month, day on day. We can pass some benefits to them, which otherwise they wouldn't have gotten on their smaller quantities. We give them other facilities like Mr. Rege is from MCX, so we hedge material. We also use MCX as a hedging tool, or maybe LME as a hedging tool. So we can hedge it and then can provide them onto their required rates. We can have a long-term contract with our buyers. They might be needing immediate dispatches, which the bigger players cannot facilitate. Maybe for a 50 tons customer or 25 tons customer, they would be going on a JIT model. They need overnight deliveries, which they might not be getting. Plus, if they are going with manufacturers, or if they are going with bigger players, they would be putting up their money upfront, again worsening up their working capital का situation. अगर 100 ton भी माल खरीदना है, let's say if they are buying 100 tons, that means 2.5 crores they have to deposit, then wait for allocation, then wait for transportation, and then they'll get it in their backyard. So that would take another 7 to 8 days, which in my case, I have warehouses, which in our case, we have warehouses in and around the major consumer centers in India, where we can give them overnight deliveries. So that is the third value addition, services. The fourth value addition is that we also have a NBFC, which facilitates into credit, Oxiso Financial Services. So the customer might be a bit tight on the working capital situation because he is expecting his customers to pay in, let's say, 15 days, 10 days, or 30 days. So credit is a facility which we facilitate. So that was a gap we identified. And last and but the most important, after the invent of GST. So what actually happened was there were initially not so good practices were being taken place before the advent of GST, some bill routing or some other things which I won't delve into much. But now consumers, now with the advent of GST, it is a mandate that you would be responsible if your buyer, if your supplier is not filling their GST returns. So they want to be, my customers or the consumers, they want to be associated with people in the market who are very organized, who have a strong documentation, and wherein everything is as per the rules and laws of the land. So that was the fourth value addition that we figured out, and that is where we pitched in. As of today, as we speak, we are the largest aluminium, we are the largest non-ferrous traders in India. We are the largest in aluminium. This is specific for aluminium, but otherwise we are the largest in copper as well as zinc in India.
Okay, great to have you with us now. Acha, before we go ahead in the discussion, I would like to just inform everybody that we are this discussion is being live streamed on our website steelandmetalexpo.com, and as well as on our Facebook and LinkedIn handles of Steel World as well as Metal World magazine. So this is for our viewers also who have any questions. If they are on steelandmetalexpo.com, there is a WhatsApp icon there. You can put your question, it will reach us. If you are watching from Facebook or LinkedIn, you can put the question in the chat box, it will reach us. So we will be here to, the experts will be happy to answer your queries and questions if there are any. Okay, so now moving forward in the discussion, Mr. Rege, so how do you see the future now? You say the community is growing, a lot of people are now taking advantage of this commodity trading, but still I am sure there is lot many who are not looking at it. So how do you see the future and what is done?
You're right, Mr. Chandekar. So, the delivery-based contracts is about 4-year-old phenomena.
Yeah.
And to increase our relevance to a wider audience, the first thing we did was to make our reach available pan-India. So, if you try to imagine, we were only a single delivery center product, until 2021. So we made a pan-India presence so that east, west, north, south, from wherever people are there, they should be able to transact based on that. Number two, we've done is we made no discrimination in terms of giving a preferential treatment to any of the delivery centers, because we believe that only the surpluses or the deficit should eventually result into taking or making delivery on MCX. Prima facie, we believe that benchmarking and price discovery should help physical market to deal bilaterally, secure their margins by way of hedging on MCX. Delivery is only, I would say, only to ensure that the futures market and the spot market converge at some point in time, and facility for that, which is why we believe it is not relevant to be there in each and every town. Another benefit which we brought to the table was that ever since GST was implemented, the integrated nature of the tax was such that people based wherever can transact, at multiple locations, and the tax would work accordingly. I think we are all coming to the terms, how to this thing. So that's one. Number two, three of our delivery centers, Calcutta, Chennai, and Thane, are at the ports. So which means in case if there is a disparity in the prices and the import needs to swing into action, there is enough bandwidth available for the physical trade to import goods and deliver at these destinations. And vice versa, if the imported goods is already there, they should not feel any problem to dispose the goods. Uh, so that disposal should not be a problem. So my point is the integration is twofold. One, the domestic players start using the MCX prices for their benefit and benchmarking and start hedging it. Alternate shades of goods, east, west, north, south, we have seen there is inflow of metal in Raipur big time because it's a centrally located, proximity to the domestic producers. Nalco is Odisha, Angul proximity is about 400 kilometers. Balco is in Chhattisgarh, proximity to Raipur is fantastic. Vedanta Aluminium proximity is fantastic. Aditya Aluminium, the Mahan facility. So my point is that it is an excellent redistribution center naturally for the domestic trade. So we see a good amount of inflow of metal to the Raipur center. At the same time, there is enough metal which is coming by way of imports to Calcutta and even domestic sources and to the Thane. And we see sporadically there is metal inflow coming to these centers as well. And so the idea is, uh, in the tough times, people should go on dealing bilaterally with the domestic producers. That's the primary thinking. For pricing and benchmarking, use MCX because it's a more relevant benchmark than using LME. Because LME, from the landed price or the dealt price, you will see LME portion is probably about 65 to 70%. 30% of the components are unhedged. I mean, you are dealing premium bilaterally. You have no clue as to what the FTA countries, is not paying 8.5% and they are, pocketing it. So my point is, when you're dealing on an absolute number based on Excel sheet, it is far better to use that thing against the MCX prices, because MCX price is giving you far more holistic price as a component than breaking it up into into variety of things where you have a very little say for that matter. So what we are trying to do now is we're trying to reach out to the global producers so that they can look at MCX, or they can look at the domestic supplies to be another way to deal with it. Because now, instead of depending on the general hearsay approach, they can use MCX prices to really assess whether it is beneficial for them to deliver here and have a better realization. So that's one way. And availability of metal in MCX anyways gives a very good bandwidth to the domestic traders, domestic suppliers, domestic consumers to use this for not only hedging and sourcing as well. So Shashank was mentioning that people with a smaller quantity will never have a preferential treatment, because of the size of consumption is low. But the likes of of business, when they come into the play and start distributing to the smallest of small, and they hedge, it is this platform which is treating everybody at par. We have kept the delivery units or the trading units at far lower numbers. So we have two contracts on aluminium, which is aluminium 5-ton contract and aluminium mini, which is 1-ton contract. So the smallest denomination is also possible to be hedged, is the purpose with which we explain to the market that it's high time that you focus on margins, you focus on efficiency of the trade, and do not make any gamble on the prices. Use MCX to use for hedging purpose, and focus to scale up, focus to bring efficiency and do a better quality production, which is where your expertise lies, and outsource every pricing related headache to the MCX.
Thank you, Mr. Rege. Now we will hear from Mr. Mishra, the main producer's perspective on this, sir. Mr. Mishra.
See, some of the points we discussed here, they are quite relevant, like Mr. Singh's point that, some of the small, producers, obviously they can't get the right treatment from the large producers, like, Hindalco, Vedant or Nalco. In a way, that is true. And that is where, basically, if you see our list of our customers, you will find they are the top ones in the country. So okay, and obviously because of the volume and all, they get certain preferential treatment. That is true. But whereas when it comes to the smaller ones, or where we have got a very very specialized one, let us say somebody wants a particular alloy, a few tons of a particular alloy, it is very very difficult to produce that, because with our big furnaces, maybe we'll make an alloy of 25 tons, and by the time you roll it to the right gauge and all, at least it will be around 15 to 20 ton will be available. And if the customer wants 1 or 2 tons, then you don't know what to do with the rest. And that is also, in a way, sometimes that becomes a challenge. And maybe the way we discussed about MCX, okay, maybe those things, even we can, maybe at one time, I think we are not very active there, but maybe that will be in an ideal situation, maybe it will be right to put it there and see if there are any other national or international customers who will like to take it. But normally, more than the exchange, we depend on a LME based price, and on that, we try to sell to our customers.
Yeah, very well said, sir. In fact, I would also like to share. I was in Mukan a lot of years back, and then we also had a minimum order quantity of 5 tons. We could not, support orders less than 5 tons. And even as you said, if there are any special alloy steels which were ordered, then our UHP size was almost 100 tons. So 50 tons, sorry, not 100 tons, 50 tons. So catering even 5 tons of a very special alloy was not possible.
Yes.
For special alloy steels, we used to take 10 to 15 tons as a minimum order. So that is a inherent, I would say, working style of a big plant. So as these Mr. Rege and Mr. Shashank have rightly pointed out, these people are in a way catering to smaller lots also, so they can cater to smaller people as well, which we big plants cannot cater. That is a very valid point. That is a very valid point. Mr. Shashank, you want to say something on this?
Yeah. So also regarding, see, even from MCX perspective, or maybe from any hedging tool or any hedging platforms perspective, again, see, if we see these concepts as far as India is concerned, these are very new concepts. So, and that is why maybe even MCX has investor relations conferences and conclaves where they try to teach the customers or the market about this.
More of awareness sort of a thing.
Yes,
Education and awareness.
So and that is where your this conference or the webinar would really be very very beneficial. So these the customers, they are smaller. Their specialty is into production. Their specialty is into quality production. So leave the headache to us. Your hedging needs, your price discovery needs. So we, in association with because we are one of the big customers for M6 as well. So we teach them what to hedge, how to hedge, because ultimately, how in non-ferrous in particular and in general, and for aluminum in particular, ultimately they would be having their own set of customers. And in majority of the infra players, their customers would be government. So in the initial discussion, Mr. Rege was saying कि कुछ भी हो जाए, no matter what it comes, the rate is not going to change. Their rate is not going to change. But these non-ferrous, as we speak, these are very volatile. As far as pricing is concerned, these are very volatile commodities.
Sure.
And that too, usme bhi India ka hath is very minimal, because India's production is only 9 to 10%. So due to global factors and due to other macroeconomical factors, the prices fluctuate a lot. And my consumer just goes down. Let's say he purchased an order, let's say for 300 rupees for supplying a product at 300 rupees per kg. And after taking out all the expenses and everything, his margin is 10 rupees per kg. Let's say 250 is the aluminium ka cost, and 30 रुपए का उसका 40 rupees is his cost, 290 rupees per kg, 10 rupees is his margin. He is very happy in earning that 10 rupees. Now, what if aluminium goes from 250 to 210? He is even much happier. But these उसके आगे के जो contracts हैं वो long term contracts हैं उसके, those are for 3 months, 1 year, 3 years, 5 years contract. But this can go from, अगर ये 250 से 210 it can also go from 250 to 300. Then he is making major losses. He is making major losses, and that is where hedging platforms come in. And as far as India is concerned, so MCX is the platform, is the go-to platform, is the platform wherein we educate, we try, it is a price discovery, it is a hedging platform. So we educate our customers that this is where you use. Even you see globally, the biggest of the traders, like I said, we are the biggest in India. But compare that to the global players, the likes of Glencore, the likes of Trafigurage, they sit on very huge inventory positions, but they never keep it open. So hedging as a concept has been on the go in global circles as far as non-ferrous and aluminum are concerned. Is a pretty newer concept as far as Indian market is concerned, and that is where us, even the manufacturers or hedging platforms like MCX are in play, and that is where we are benefiting together. We are benefiting for the consumers as well.
Mr. Shashank, do you use other platforms as well other than MCX?
In India, MCX is the only one.
Only one. Okay.
Yeah, for our import as well as export deals, we use LME as well.
Okay. I have one question from the from one of the viewers. Is bank financing available for commodity trading? Who would like to respond, Mr. Rege or Mr. Shashank? Or whoever.
I mean, let me deal with this question in slightly
detail,
layered manner. So what happens is one thing is if the banks are going to finance the operations, so manufacturing side, yes, definitely it is allowed. If it is about if the inventories which are lying into the MCX warehouses, if that is eligible for bank funding, my answer is yes. A lot of banks had a subjectivity in terms of whether the product is eligible, but I think RBI has given enough clarifications, and the inventory can be hedged. Obviously, there will be, whenever they do financing, there are haircuts and all of that, which is a standard practice, and I think it will continue to happen. Other than this bank financing, I'm not sure, but what I definitely think the time is going to be, when we, ask say probably about 15 years back, we had no concept of whenever we took the housing loan, we bought the flat, and suppose now you're housing loan thing, nobody used to insist that you should have a life insurance cover of the person who is taking the progressively it has now become a mandated thing that whoever is taking the loan has to necessarily insure to the quantum of diminishing principle. So something on those lines, and I think it's high time that industry and I think couple of more price fluctuations will bring this thing to the foray, that the banks will look at the trades or the industries or the the companies who actually are very prudently hedging for hedge. Because what will happen is that the way in which example which Shashank gave, if the on a margin of 10 rupees and a fluctuation which is intraday basis itself about 5 to 6 rupees, I mean, how is it that the bank is going to rely on you for their betterment? So my point is, bank financing is available. Bank financing can actually do far better when you are actually teaming up with bank and hedging your instead of taking open position, so that they are also guaranteed of their returns no matter whichever way the price swing happens. So progressively, I think the banks are opening up to the idea. there is if there is any confusion, we'll be happy to probably explain to the bank or this thing if there are any confusions on that sort. But progressively, this is going to be a mandate. Even for bank financing, the people will choose to hedge their raw material risk. For to ensure that the funding costs are minimal.
Thanks, Mr. Rege. Shashank, you want to add something on this? Or
Yeah, so Mr. Rege has definitely put up the whole point. So just a couple of points that they can finance you in terms of your capex needs, can finance you in terms of your working capital needs, and that is the whole gambit of it. But say for trade or for something, you need to have those. If you are doing something, they would always be very much wanting that you hedge your risk, because ultimately, if your profits of 10 rupees can go into losses of, let's say, 30 or 40 rupees, the banks will see it will see it as a very risky business in which their
yes,
principal is not secure. So they finance manufacturing business wherein they secure themselves if they see their client is hedging or not.
yeah, okay. Yeah, Mr. Mishra, you want to put any other point to the table now in this domain?
Yeah. What has happened in the past is also, many of the funds, they have tried to speculate on the aluminium price, and that has brought a lot of fluctuations. Otherwise, if you see the global demand and supply, these numbers are more or less very steady. Earlier, it used to take 3 to 5 months if a major plant is shut down or technical issues are there. Okay, now those things are all, um, you know, we know how to deal with those sort of things. So normally, if you see, fundamentally, there should not be such a price fluctuation, but it comes because there are too many players taking the whether the money from the bank or investors, they speculate. So that speculation is creating a lot of challenges for the business.
Okay, thank you, Mr. Mishra. Mr. Rege, any other point you want to bring to the table?
See, my submission has always been, and via the medium of Metalworld and the Steel and Metal Expo, I think it is the important message which I want to convey is that the boom or the betterment of economy and betterment of business what we are witnessing now will continue to happen. The art now lies in remaining profitable and solvent while you take the more and more risk in terms of business risk and this thing. All of that can only happen when you isolate or identify and neutralize every other financial risk which is possibly manageable. So my point is that the metal price risk is not a beast which cannot be managed. Use the MCX mechanism to hedge yourself, and there are added benefits. I'm sure bank funding and financing will become far more easier once you are able to illustrate to them that the price risk is no more a devil which cannot be managed. And a final proposition of delivery of last resort continues to be a proposition, so that even if you are saddled with the inventory which you are not able to dispose, or vice versa, in both the cases exchange mechanism can help you to source and dispose goods on a regular basis.
Yeah, thank you very much. Any other point? If there is no other point, and I don't think there are any questions as of now. Yeah, no questions. So if there are no points, and Shashank, Mr. Mishra, any other point, or should we close down this discussion?
No, I'm fine.
You're
Uh,
okay? You're okay? Shashank, you
I'll,
say something.
yeah, yeah.
Please.
I'll just add one thing. I'll just add one thing. See, this the coming 20-25 years, the next 2.5 decades are Indian decade. Like our Honorable Prime Minister has also been mentioning that we want this India to be a developed economy by 2047. So for India to be developed, the first boost has to come into infrastructure. And if we are talking about infrastructure that is all about metals, be it steel, be
Yeah.
it non-ferrous, be it aluminium, be it copper, any metal. It is all about metals. So I would urge all the viewers to be like I had a reverse brain drain, so have a reverse brain drain from IT into metals. This is a beautiful sector. This is a wonderful sector. You can only realize it once you are in it. So I have been in it. It is a wonderful sector. It is a growing sector, booming sector, because next 20-25 years is all about infra.
Yeah.
So thank you, Mr. Chandekar, for this beautiful initiative, which would educate people a lot more about the nitty-gritties and intricacies of metals, of aluminium, of steel. So thank you so much.
Thanks, Shashank. In fact, let me share also. I always write in my editorial that point that the Indian economy's growth is revolving around the infrastructure development. Correct? And if you talk about infrastructure, you cannot bypass metals. If Indian economy has to grow, if India has to become a developed country, and if Indian economy has to grow, the metals has to have a strong foundation of metallurgical industry. So unless the metals grow, unless the steel grows, Indian economy cannot grow. In other words, let's let's be very positive, and let's be very confident that Indian economy is going to grow, and with that, metallurgical industry is also going to go ahead in bounds and leaps. So let's close down on this positive point. Thank you very much, Mr. Mishra. Though you had other commitment, you made it a point to come to this forum and express yourself. Thank you very much for that.
Thank you.
Thank you very much for your support and your detailed explanation about the whole commodity trading subject. And Mr. Shashank, thank you very much for two things. One is to come back to metal industry, and the second is explaining your role and how you are helping your customers to hedge and to reduce the risk. Okay. So
Thank you so much, sir.
Thank you.
Thank you.
Thank you, sir. Thank you so much.
Thank you.
Thank you.
Thanks. Bye.
Bye.